Michael Houston, he's the analyst at CMC Markets. He joins us on the show with his perspective on the global markets as well as how the commodities markets really look right now. Morning, Michael. Thanks so much for joining in. You know, in India, we've seen the Reserve Bank hiking the base rates by about 50-odd points recently. How much of a concern should there be that these rate hikes in emerging markets like India are going to dent global growth?
Well, I don't think it's up for consideration. I think it will dent global growth to a certain extent. It'll certainly dent growth in the context of these economies. The Chinese central bank, the Indian central bank have already said that inflation is their top priority, and they're prepared to take a hit on growth, or a small short-term hit on growth as a result. I think the bigger concern is obviously the effect that could have on developed economies, and obviously that result is not, or that outcome is not really quantifiable in the context of this conversation, because of the fact that these emerging market economies have been identified as key export markets for the developed world.
Michael, realistically though, if countries like India don't go down the rate hike route, what else can they really do?
Not much. I mean, what they could do is what China have been doing, and basically impose bank reserve requirements, increase them. They can impose capital controls in the same way that Brazil have done. But when you're fighting food price inflation and oil price inflation or commodity price inflation, which is broad-based, inflation or interest rates are pretty much the only tool that they really can use, given that most commodities are priced in dollars.
Well, Michael, you know, this week the commodities like crude as well as copper have been under pressure on vis-a-vis growth concerns, though we've seen crude really inch back around that $100 per barrel mark. What's your forecast for crude given the current climate?
Well, if there is concerns about global growth, there'll be a certain amount of demand destruction, but I think crude oil prices will continue to be underpinned on the back of geopolitical concerns out of the Middle East. So downside on Brent crude, I don't really see much below $105 a barrel, and on West Texas US crude, I don't see much below $95 a barrel.
Michael, let's touch upon the Eurozone, which has been battling all of those debt worries. The Bank of England as well as the ECB, now they have kept rates on hold. In terms of the broader Eurozone, how do you see rates rising?
Well, Trichet's press conference, he omitted the word strong vigilance, so I don't think we can expect a rate hike any time before July. However, we've seen some very poor economic data out of Europe over the past couple of days. Eurozone retail sales, they dropped 1% for March. Industrial orders dropped 4% this morning. So there is a concern that maybe higher interest rate expectations are starting to filter through into the European economy. So I think that a rate hike the next rate hike in Europe could come maybe in August.